What is up, y'all? We are here with the first day of trading on the Express funded account. Now let's go ahead and look at the market. I'm gonna have TJR playing in the background.
With that problem, why do I do that? And then say,
see, we had a major dip right here. I had a couple confluence, a couple fair value gaps.
To feel the need to do that.
Scoped out.
And
red one is 4 hours, I believe, or 1 hour fair
the
value gap.
emotions that you've outlined for these three things are greed, whether it's overconfidence, you think every single one of your trades is going to take profit, and when it doesn't,
this is the 5.
You get really upset, or you think that it was the market's problem, or you blame it on someone else.
Nope, still 1 hour.
It's not the market's problem. The market's going to move how it moves. The market does not give no fucks about you. It's your fault. Every single mistake, every single issue, every single problem that you have in these markets, every time you lose money in these markets, it's your fault and your fault only. And the sooner you guys can identify that and understand that, the way better off you'll be. Why do I want to make more money? I'm broke as shit. Cool, get a job, okay? Why am I being greedy? Because everyone loves money. How do I stop being greedy? Actually have money. What does that lead to? Get a job. Perfect. That's our solution. Okay? What else could be something, a problem or an issue that people are having that pertains to psychology? People getting out of trades. Oh, I get out of trades before it hits stop loss or before it gets take profit because I get too in my head. What's the problem? We get out of trades too early. Why are we doing this? We're not confident in our analysis. Maybe we're confused. Okay? So that shows fear, right? What are the emotions that are playing into that? Fear, underconfidence, which is essentially fear. Okay, maybe confusion, lack of bias,
highs and lows. I forgot.
And maybe just lack of knowledge. All 5 of those. Okay, so how can you fix fear? Why are you scared? Because you're probably dealing with real money, live money that you can't handle. You can't handle that loss size. Why are you scared of losing? Why are you cutting a trade before it hits take profit? Why are you cutting a trade before it hits stop loss if you actually know your risk? Right? If you actually know your risk, you wouldn't be doing that. Okay? Understand your risk. Solution 1. Maybe solution 2, you shouldn't even be trading on live because you don't know how to trade yet. Solution 2, you shouldn't even be putting any money at risk. Maybe you should go to demo. Perfect. Solve both those problems. Risk less or go to demo. Or don't even risk less and just go to demo. It's as easy as that. Why are you scared? Probably because you need the money for that trade to hit. Why do you need the money? You're broke. Get a job. Get a job, go to demo. See how easy it is to find solutions to your problems when you identify what the problem is, identify why we are doing this, why we are executing on these bad habits, and then say, okay, what emotions are leading me to, what emotions are driving me to these bad habits? And it's not us saying, this is my problem, how do I fix it? It's saying, this is my problem, this is the reason why, this is what's causing that reason why, how do I fix this stuff down here so it pyramids up? And by fixing this stuff down here, you eliminate the chances of these little emotions affecting other areas in your life as well. Fucking 5 birds, 1 stone. Okay, by killing emotions and by identifying where and when you act on these bad habits and on these bad emotions, you'll go real fucking far. Move the market. I can't, dude, I'm sorry. Messing up, but we're focused. All right, so with that being said, right, we understand that, okay, fair value gaps are essentially a liquidity void within the market where market will probably draw to and then react off of, and that's essentially what it is. It's literally just an imbalance, a liquidity void. Price draws back down into that. Why? Because there's no resting sell orders, or there's no resting buy orders in the opposite direction of wherever price is trending, which in turn makes fair value gaps a retracement tool. Essentially, it helps you find trades off of retracements. And as we start getting deeper into this, we'll start explaining, all that shit about how you can use these. But something to note, fair value gaps are not reversals. Fair value gaps are not used for reversals. So if we see market trending higher and higher, if we see market going higher, right, breaking higher highs and higher lows, if we see market doing that, we are looking for fair value gap. We are looking for bullish fair value gaps. Okay, and we'll talk about where to find them, but in this case, right, we're bullish. So what are we looking for? We're not looking for bearish fair value gaps to turn price around. We're looking for retracements into these bullish fair value gaps for reactions. Okay, and continuations. That's essentially what fair value gaps and equilibrium are used for. It's continuations and retracements. Okay, so with that being said, now let's talk about how we can identify. Fair value gaps are essentially, or imbalances are essentially, a 3-candle pattern. The first candle, okay, which looks like this, schmink, okay, and then the second candle, which is the candle that creates the imbalance, essentially, will be like super full like this, and then the third candle, which looks a little something like this, okay? And fair value gap looks something like this.
How could you ever try to play me? Rock voodoo, Westbrook, rock baby. I never follow with the
so
bro.
what is the area of fair value? What is the area that has not been filled, right? That didn't have any, resistance, resting orders, right? We see this, right, and we'll show examples of this on the chart, but we see this candle, right, massive up candle. Right here, right? And the issue that I have with this is when people execute purely off of just the fair value gap getting hit and without a reaction. Wait for a reaction or scale down to a lower time frame, see a break of structure, see a change in market structure shift, or just a reaction like with a bullish candle or a bearish candle, whatever direction you're trying to see it go, and let that be your confirmation to enter. Okay, be very patient with these because they're all over the chart. And it's really easy to get kind of caught up in them and be like, oh, there's fair value gap here, fair value gap here. All of these are going to work. And it's like, no, they aren't, okay? Not all of them are going to work, and that's why we have to wait for confirmation. That's why we have to wait to see if there's a reaction. That's why we wait to see on a smaller time frame if there's a break of structure. We'll put in the pieces together. So that's really all fair value gaps are. And it's a 3-candle pattern. The first candle's wicks do not match or do not fill the second candle's body. And the first and third candle's wicks do not fill the second candle's body. So let's say this is the body. Patience is a very, very big thing in trading, in that, you guys are fiending to place a trade, but you also have to wait for your setup, for your confirmation, and sometimes you won't even take a trade during the day. Most of the time I can find a trade to take, but with you guys, right, you want to wait for a good, high quality, high potential, high probability setup that's going to get you paid, not just entering off of, oh, it looks good, or like, oh, like only one confluence I'll enter because like I want to take a trade, right? We can't be thinking like that. So what are some rules? What are some things that can help us build on patience? Number one is literally just having a trading plan set up literally your exact trading plan, and it should be a step-by-step list of when you should be able to execute. So whether that's, okay, first we need to see a liquidity sweep. Okay, we see that, and then we see a break of structure. Okay, we see that, and then maybe you gotta wait a little bit more until you see a fair value gap get entered in, and then you see a reaction, and then you enter. That literally solves your patience problem right there by just giving you a step-by-step list on when to execute. And if none of those things apply, you don't trade. Make it so it's easy to be patient, and give yourself rules so that patience doesn't really even have to be anything that you need to think about. It's literally should just be something that you are always doing in the market, and you should honestly be doing it in life too. You need to be patient. You can't be rushing things, because if you rush things, you get sloppy work done. If you rush things, you actually won't get the job done. If you try and do something too quick, right, it probably won't work out. Versus if you actually be patient, actually put time, effort, and thought into it, it'll pay off. Okay, so with that being said, first step, have a trading plan, have a list of things ready to execute. Again, this is going back to the dopamine thing. What do we have to do next? We have to make it so we are emotionless when we're trading, because part of the patience game is you are willing to sit out a day. You're willing to take your time in this, and you're not thinking about, oh, I just want to make this money. I want to make this money. Honestly, like when you come into the market, think, I do not want to trade today. Because if we're being honest, the probability of you guys right now, right, obviously you want to get reps in, and that's how you can get practice and get better. But of you guys right now should be, I want to be as patient as possible, and I should be looking not to trade. The market should be giving me a reason to enter a trade, and I shouldn't be making up a reason for me to trade. Does that make sense? You should be waiting for the market to give you the opportunity to trade. You should not be forcing yourself into trades, right? And we'll talk about forcing trades later in this course, or probably in like a subsection of a video. But that's a huge thing. If you're forcing trades, odds are you're fiending for that dopamine boost. You're thinking just about the money. You force your bias upon the market when the market isn't even following that bias. You're pretty much just in your head kind of making this up, saying like, oh yeah, like I think market will go in this direction, like it looks good. Like no, what's in your trading plan? Did this happen? Did this happen? Did this happen? Okay, now look at it and then see if it looks good. Sometimes you guys should be patient enough where that step-by-step plan, that step-by-step list on your trading plan, all those things get hit. And sometimes you still shouldn't even trade, right? What if there's news, right? You got to be patient. You got to wait for news. Sometimes, if there's news in the market, you shouldn't even trade. Be open to not trading, okay? In fact, encourage it, okay? You really need to just like take 2 steps back and understand that this thing will not happen as quick as you think and as fast as you want it to. The second you understand that you're going to be in this for the long run, and all that money that you're thinking about making really won't come until a couple years, which is a long time, that's when you can be like, okay, well, if I'm not actually going to make money today, if I'm not actually going to make hella bread by next week, by next month, by the next 3 months, then what's the point of me trading sloppily or promoting bad habits? That's what we need to fucking bite in the ass and get gone. That's what this whole boot camp is all about. Biting those bad habits in the ass and getting them out of here. Because a lot of you guys, odds are you've been trading for a while and you have all these bad habits built up. So this is up to us to, fucking nip it in the butt and kill it. Okay. So
it's for both accounts too.
We need to practice patience within the market. Be sitting there
it was just
ready to trade. But you almost want the market to prove itself that, hey, this setup is so good that there's no reason for you not to take it, right? Those are the types of trades that you should be taking instead of the ones that are like, oh, well, like this happened, but this didn't happen. And I'm also not sure because it's against the daily bias and it's off a retracement. No, bro, that you should not be taking that.
That was about a hit profit.
You shouldn't be taking that trade, bro.
Whatever.
Definitely not, right? If you're the
now
one
we're
to
on the
try and
actual
force your bias onto the market rather than having the market come to you, rather than just waiting with your fucking sniper out, fucking waiting for that entry to hit and being patient, just waiting for price to develop. Trust me, guys. Yes, maybe you like waiting an extra 1 or 2 candlesticks isn't going to hurt you that much when entering a trade. Sometimes, maybe all those execution points get hit and you're like, well, let me wait for one more candle. Let me wait for price to develop. Be patient, see if you get the volume, see if you get the volatility, and then enter. Because
I said that yesterday for this account.
This is not a game to take lightly. This is a game where you come into the market with potential to lose money as a job. You come in every single day not knowing whether or not you're going to make money or lose money, and that's a lot of pressure. So wouldn't you want to take those high probability setups? Wouldn't you want to be patient and be calm, cool, and collected when those setups come? Probably would. And wouldn't you not want to force yourself into trades that aren't high probability because you're probably going to lose, right? You would probably want to be patient. Okay, and that's just for the trading part. Now, if we talk about it in life, like for your future, for your goals, a lot of you guys, it's good that you set ambitious goals. That's great, but understanding that they aren't going to happen in a day or 2 days or a week or a month, that's very key. But by being patient and by thinking that way, like, oh yeah, it probably won't happen very soon. Odds are it'll happen a lot quicker than if you try and force it. If you try and force it to happen in a month, if you try and force this to happen, if you just take your time with this, it'll all come in due time. Everyone's on a different timeline in their trading journey. It took me 2 years to turn profitable. It might take you 5. It might take, little Timmy fucking 6 months and he'll be a way better trader than me, right? You guys have to be very patient and understand this is a one-on-one game. It's between you and the markets. Okay, there's no one else. There's no one else in this. Okay, if you're the type to like be trading with your boys and stuff, stop doing that, bro. Stop trading with your friends, because they are going to have completely different biases than you. They're going to, think of concepts differently than you, right? This is a very individualized job. Everyone trades differently, whether they trade the same strategy. Every single person has something that is slightly different about the way that they trade, right? Day in and day out, if I have the same strategy, even if I have the same parameters as everybody else, we're probably going to take different trades because we see things different. We execute differently. That's just how it works. Hopefully, with that being said, I got the point across. You guys need to be patient when it comes to your goals. Be patient when it comes to trading and executing. And trust me, it will be beneficial way more than you think. I know you're probably wanting to get right into the charts and you think that's what you need. It's not. That is not what you need. You do not need to be placing 10 trades a day to make a lot of money in this. I take 1 trade a day and I call it good, bro. Money will come later. That's another thing. You got to realize you're trying to focus on the skill first. Learn the skill and realize that if you're patient and if you actually learn the skill first, that money will come later. That being said, there's patience. Your homework for today, this one's going to be fun, man. This one is going to be very fun, and we'll see who's able to do it. So my basketball coach was really big into like mentality stuff, and this was a drill he had us do, which was probably one of the hardest things I've had to do mentally in like a long time. And it sounds like stupid. It sounds kind of bitch made, but trust me, do this and you will realize how fucking hard this is. Pretty much what you do, you go in your room, sit down on the floor, go in really any room that you can turn off all the lights in. Make sure there's no light coming in. Turn off all the lights. Okay, and then put your phone outside the door with a timer for 30 minutes. You're going to sit in your room with all the lights off, with your eyes shut, and you're just going to meditate. You're just going to sit there and just focus on your breathing. Just breathe in, breathe out, breathe
30
in,
minutes?
breathe out. You can't stand up, you can't open your eyes. You're just focused, sitting there in dead silence, no music, no light, nothing. Focus on your breathing and just trying to empty your head. And try it for 30 minutes. When I tell you, I thought a fucking hour went by and it was probably only 10 minutes because I was in that room. It felt like forever. And hopefully what you'll realize by doing this, and I really encourage all you guys to do it, don't cut it down to 10 minutes, don't cut it down to 15, 30 minutes, bro. Trust me, you will realize how short your attention span is, and honestly, how terrible social media and technology is for you.
Yeah.
By doing this, because you'll realize 30 minutes in reality isn't that much time. It's not that much time, right? You can waste 30 minutes on your phone doing whatever, but when you're by yourself and there's no distractions, think about how long that time lasts. It's way different. It's way different. And now, when you have that realization of how long 30 minutes really is, that's when you realize what you can get done during that time. And that's when you can start to realize how much time you waste doing stupid stuff that take up so much time within that 30 minutes that you could actually be doing, something beneficial, something good, something productive. So with that being said, I encourage you guys, turn this shit off right now. Lock yourself in that damn room. Put your phone outside the door with that timer and make it an alarm or whatever. That being said, go fucking meditate. How your experience was with this exercise, if you want to continue it, maybe for less time every day. I used to meditate for 10 hours. Sorry, not 10. 10 hours would be crazy. 10 minutes every morning. Wake up, take a cold shower, and then I'll just close all the doors, turn off the lights, just focus on my breathing. Really locks you in. It's very surprising how beneficial meditation can be. So that being said, get after it. I'll see you guys tomorrow.
So it's 5 minutes for everybody.
Welcome. Legiti. Welcome to boot camp day, who knows what.
But it can also
last day of our fair value gap section. I watched over the second video and it wasn't as bad as I thought it was, so we're going to leave that one there. And then honestly, this video, there isn't too much to cover besides kind of recapping what we talked about in the first 2 episodes. That's kind of what the third one is for, just a whole recap and then showing how we can put everything together with it. So I do think the second one was good enough, and we'll go a little bit more in detail today on how we can use fair value gaps. But hey, why we want to use fair value gaps. We know why they're beneficial in the market. We know why the market reacts off of them. And we also know how to spot them. Today is pretty much just going to be a quick overview, okay, and then kind of putting it all together, how we can, actually use them to make money. And honestly, today's trade that we took was a perfect example of it. So let's jump right in, you guys. So to start off, okay, this is going to be spike up into that liquidity area. Boom, we get a break of structure on the 15 minute. That is kind of drastic all the way down here. Okay, either you can short off of this break of structure right here. Okay, target previous areas of liquidity down here. Maybe the accumulation that caused the rally up, that was from right here. Whatever you want to do. Maybe target.
Horrible trade. I don't know what I'm doing. Should have waited. I do think it's gonna come down, but I don't want my $300 to fucking knock me out. Because it can bounce up here. It wasn't a good, it would have been a good entry right here. It wasn't a good entry at all.
Order filled.
I'm closing it right there. Just because it wasn't a good entry. I could have been right, but yeah, it wasn't a good entry. Scared money. Okay, now maybe.
Order filled.
Okay, now that's a better entry. I want this full screen. Come on, just hit it.
Order filled.
Beautiful! $500 profit. Let's go. Deactivated the account. I can't make a trade anymore. And it's wonderful. Here's why. Because Donald Trump is talking at 10 in the morning, so who knows how the market's going to move. The market in general, I didn't know how it was going to move. I was bearish on it, but once I saw this, bro, right before market open, I was scared shitless. Till I noticed it was a news day, and that's the reason that fucking tanked. Overall, once it bounced off of here, I was bearish. Once it bounced off of here, I was still bearish. And there's a whole lot of fair value gaps to get filled in right here. I'm gonna leave my analysis right here. I will come back later today and see how it's doing. But I can't make any more trades. I locked myself out of both accounts, even though the other account was kind of an accident. This one was an accident. But from now on, I am gonna be doing this: $300, $500, $300 max loss, $500 max profit. That was a great trade. I'm glad I got out of this one, because right here, yeah, it could have gone bad, and it was just a bad entry. But I was able to get out in the profit and get back a better entry and come back, you know. One thing is, I am going to be working on my patience. I feel like today was a little bit of an improvement, because at this point, trading the combine, I would have already tried to make a trade by the point of 7, but now it's 7:10 and we've already hit our profit target. We lost $68 yesterday. It could have been better, could have been worse. Today was the first day of actually trading the funded account, and I'm actually happy with how it turned out. Let's hope tomorrow's the same and we gotta come back next week and do the same thing. But day 1 out of 5 complete for our payout. Hopefully we're able to have 5 continuous green days. That's really what I'm hoping for. So I'm gonna do a lot of studying while not doing this. So yeah, I hope you guys enjoyed today's stream, today's video. I know it was a short one, but make sure to hit that follow button, make sure to hit that subscribe button so you guys can stay tuned every single day that I'm trading live. Alright, well, I was actually looking at the clips and I wanted to show you guys this because I'm not gonna lie, I traded in the dark. As you can see here, it did come down here, but it didn't touch this yellow line as I expected it to. It actually bounced up right before it. So I would have had to be disciplined and close this trade right here. But if I wouldn't have closed it by myself, I would have been stopped out. Now it did come back up here and it is still bouncing off. So who knows how the market is going to move, especially after Trump talks. But that just goes to show that I got lucky. That's what I call a trade in the dark. Now, thankfully, I was on the good side of luck, but I need to make sure it's not luck. I need to make sure it's skill. There's only one way to do that. Keep learning. Keep doing what I'm doing. Keep studying. My analysis was right, but it just reversed right here, because it was going bearish from here. But if you zoom out, as you can see, from here this point up is just bullish. Like I said, who knows how it's gonna be after Trump talks. Let's make some trades that's not based off of luck. Hey, but this is what this is about. Complete transparency. Today was day 1 of actually trading my Express funded account, and it turned out good for us. Now we're in the positive 436 bucks, because yesterday I did trade. We basically almost broke even. I was up 200 something bucks on my first trade, and then the market spiked up out of nowhere. Could have been down 600 bucks, but then it came back down to where I bought in, and the market closed at negative 60 something dollars. We gotta work on our skill, but thankfully we have an Express funded account that we're actually able to make money on. Now we have 1 successful day out of 5 necessary for a payout. We could have been at 2, but we can't be thinking about the could have or the what ifs. We gotta think about what is going to happen. Now I'll catch you guys tomorrow on tomorrow's trading day. Tomorrow's Friday, so hopefully it's a good day for us, especially since we're gonna have to wait the whole weekend to make another trade on Monday. But I'll catch you guys tomorrow.